2011 was a difficult year for us because we basically, by the way, our year end is generated 2011. So we had come into, some of our subsidiaries would come into the distribution of the of Suzuki cars, and we came into the market right as the market was tanking. So we had issues with large unsold stock, which took its toll on our profitability. We also had issues with receivables in our leasing business. And what we've done is, between recoveries and restructurings, and we've actually reduced our exposure significantly on the lease receivables.
All right. But has your target market changed in any way?
Significantly. Over the last few years, I mean, we've actually moved the focus of the business significantly. We are more focused on large corporates. We tend to look at ourselves more as a transportation logistics business supporting large corporations across West Africa. We provide cars and marine vessels for a lot of the big names that in telecom, in oil and gas, and manufacturing, both in Nigeria and in Ghana. So it's basically what our business has done, and maybe over 90% of our assets are deployed in that regard at the moment. So,
would you say that the risk for SMEs and individual customers has been elevated now, considering the environment with the high interest rates?
Well, I certainly think so, because I mean, with not just the high interest rates, the power issues for a lot of them. So power, the costs, I mean, running diesel generators is probably not the best way to run a business. So for a lot of that, what we've done is, like I said, sidestep the, downplay the SME business. So we're focused more on supporting people like Shell, people like LNG, MTN, Cadbury, PZ, the likes of them, Huawei, Alcatel.
So those are some of the big names you're dealing with. Okay, but how are you dealing with the environment? I mean, it's quite challenging. Clearly, interest rates are higher. I mean, you obviously have to borrow to lend. Give us a sense of how you're coping with the challenges of these times. And of course, you also mentioned issues like power, which of course will be putting some pressure on your business too.
Well, certainly. I mean, one of the things we've tried to do is, for business, some of our businesses have foreign currency receivables. So we're trying to move some of those to fund those businesses in US dollars rather than Naira, because we expect that Naira interest rates will remain under pressure for some time to come. So we're basically trying to switch around. That's one way we intend to manage interest cost exposure. But of course, I mean, liquidity is a big issue, both for the large corporates and small corporates. So we tend to be a bit more aggressive at recovering, chasing up our debts with all our clients across the board.
Okay, you just mentioned that you're in Ghana, so talk to us a bit about your international operations. How are those going?
Well, they've certainly turned around. We got in about 5 years ago, but we really didn't have control of the business. We only just got the final approvals from the Bank of Ghana sometime last year. So we had to manage by proxy, more or less. And as a result of having got control, we're now in the process of actually increasing our shares. We've bought some shares from an existing shareholder, which will take us up to 89%, even though that will probably drop because we want to then issue shares to shareholders locally in Ghana. But either way, we then tend to drive that business, because we have a lot of demand from corporates who we service here in Nigeria, who wants business across West Africa. We actually do have demand for business in Sierra Leone and Liberia, which we're looking at, but we haven't actually taken a decision what to do. We want to get to grips with what we're doing in Ghana first before we look at any opportunities outside those areas.
All right, and if we look further ahead, give us a sense of what to expect in 2012. I know your year end is 2013, January 2013, but give us a sense of what to expect in this fiscal year. Obviously, you've turned things around. You're now in the black. What should we expect going forward?
Well, I think our performance will be stronger, certainly, than it was last year. There are key things that will drive that performance. One of them is the push for local content in the Nigerian oil and gas industry, where we've positioned ourselves as a major and credible local player. Late last year, we delivered 6 vessels to support Shell's operations at Bonny Terminal and EA Field. And Shell have given indications they're very happy with the level of service that we provide. Right now, we're actually talking about expanding that. We manage some vessels that are owned by Nigeria LNG. As a result of the success we've made of that, LNG has recently given us a contract for 2 additional patrol boats, which were deployed last weekend. So we do expect those kind of transactions to come on. We have a large anchor handler currently working for our friend, which we're hoping we can get extensions into that. So we do expect that those transactions will drive the marine business.
And overall, what, in terms of Naira and Kobo, what will that translate to in terms of growth?
In terms of growth, we expect to see at least 40 to 50% in
top line growth.
Top line growth, and then profit-wise, we do expect that we should have at least double our profits this year, at the very least.